If you're a pharmaceutical professional and you just wrote a painful check to the IRS, let me share something with you. That tax bill probably wasn't random. It's not because of bad luck. It's not because the tax rates are too high. There's probably a strategy gap. If you're earning a strong six-figure income, especially in the final 5 to 10 working years, that gap can cost you far more than you realize. Every April, I hear the same frustrations. I make great money, but why does it feel like I lose control at tax time? The issue is not that you have a bad CPA or that you don't know what you're doing at tax time. The problem is smart professionals are relying upon tax filing and not tax planning. They're two very different things. Your CPA is just being inundated with tax filings that he or she needs to get out before the deadline, and they may not have the holistic view to do proper tax planning preemptively. The decisions that impact your taxes in April, those decisions had to be made in the previous year. Tax filing reports what already happened. Tax planning helps you shape what happens next. And if no one's helping you plan through this year in preparation for next year's taxes, you're not planning, you're documenting. I work with a lot of pharmaceutical professionals, and what you don't realize is your taxes are typically more complicated than many other people. You have all these different sources of income, and some of the default tax decisions have been made for you and are not relevant to your actual income level and your actual tax bracket. For example, your bonus check. Oftentimes they default to 22% across the board for withholding. Oftentimes you may be in a much higher tax bracket, 24, 32, 37 plus percent. So there needs to be an adjustment there, but that hasn't been accounted for. Also, as your restricted stock units vest, you're taxed automatically at a default tax rate. The same thing, there may not be enough withholding there. Also, you have other sources of income, dividend payments, interest payments, all these things come into play, and you can't withhold taxes for those types of income streams. So you may be hit with a very big surprise tax bill that you had not adequately strategized for nor planned for. And here's the biggest mistake that I see. Regardless of how much people have to pay, most people simply file their taxes, they get that behind them, and then they move on. They don't adequately analyze the tax return for hidden opportunities to identify where future retirement taxes may be quietly building and accumulating in the background that are going to hit you later when you can least afford it. In order to plan for your taxes preemptively and properly, we need to look at all your various income streams. We need to do a thorough analysis of your tax return and also look at your benefits package to see if there are opportunities for us to offset and mitigate taxes now and in the future. We also need to do a projection of your taxes and projected tax expenses in retirement. That's critical. That's one of the areas most people miss. And the key thing to understand, if you're within 5 to 10 years of retirement, what you're doing now will impact not only next year's taxes, but potentially your tax income in retirement, your Medicare premiums, how much control you have over your assets, how do you leave assets, how much you're able to safely withdraw from your portfolio. These things are very important. We don't need to just observe what's happening. We need a strategy. We need to plan preemptively. We need to make some decisions now that are going to set us up properly for the future. That's why this stage in life requires a different level of planning, not reactive, but strategic. If you're in this space and you know you've outgrown basic tax filing and just dealing with this once a year right at tax time, if you really want to develop an overall strategy for now, for retirement, for the future, please reach out to me. This is Antoine Harris with Platinum Bridge Wealth Strategies, and I'll talk to you soon.